Okay, this is your morning brief for Wednesday, January 30th. We're in the middle of earnings seasons, tons of earnings coming in. We can't even keep up with them all. But Pfizer reported an inline quarter and indicates a strong pipeline. So we've been on Pfizer for almost a year now. We quite like it. Inline quarter is great. Guidance was a little bit weaker. We'll overlook that as the market did. The shares were up 3% yesterday. And mostly because it's just getting stronger and the strong pipeline. They said they have the strongest pipeline in their history. So that always bodes well for big pharma. Okay, Danaher beats, reporting $1.28 versus $1.27 expectations. This also represented 7.5% growth in earnings per share and revenue growth of 5.5%. So that's so standard for this company. It's exactly what they do every year. Their earnings go up a little bit and revenue goes up a little bit and shares go up a little bit. It's just standard procedure. I love Danaher, great company. We should get a report out on that. Apple gives the market a lot to chew on. They are all over the map. I don't know what to make of this one, but China sales fell 27%. Total iPhone sales are flat. However, they did beat earnings of 4.18 versus 4.17 per share. Let's not give them too much credit for beating. They did just warn 3 weeks ago. So when you warn and then you beat, I mean, is it really a beat? The biggest encouraging thing, though, was service revenue was up 13%, beat expectations, and it was $10.9 billion. So that's where the company needs to go. If they can continue on that trend, I could be a little bit more bullish on the name. Right now, I'm definitely not bullish, but I did like to see that service revenue growth, and if they can keep going on that, I could change my mind. Okay, Alibaba revenue growth slows to 41%. Wow, that's a high quality problem to have. It's practically grinding to a halt at 41%. EBITDA margin did drop, however, from to 30% from 43% a year ago. This is an interesting stat. Singles Day shopping holiday, which Alibaba made up, brought in $30 billion in gross sales in one day. Wow, that's incredible. Baba's all over the map. It's so difficult to model and understand. The growth is like crazy, but the returns, like you can see, I mean, they grow, but margins dropped down to 30% instead of 43%. So there's no consistency here. It's super difficult to value. It's a tough one, but you gotta watch it because it's a good China indicator. And we have some other smaller ones that we like that we're really watching, Momo and YY. So gotta watch the Baba. I don't know. I'm still don't know what to make of this one. But more earnings are rolling in. I said we're in the middle of earnings season, so we have looks like Facebook, Microsoft, Qualcomm, Tesla, McDonald's, Visa, Boeing, and AT&T set to report after the bell. Wow, that's quite a lineup. That'll be interesting. Okay, overseas markets and futures are up ahead of the Fed meeting. Fed usually goes at 2 o'clock. They are not expected to raise interest rates, so that's a good sign for the market typically. Just, I mean, you could keep it so simple as interest rates up, stock market down, interest rates flat or down, stock market up. That's, so simple, but it's the reality. Follow the Fed. Don't fight the Fed is kind of the saying out there. Okay, so that's your morning brief for Wednesday, January 30th.